Hey everyone, Mike Novak coming at you from the Novak Real Estate team. Today we're talking about mortgage basics. We get asked questions a lot like, hey, what does it take to get a mortgage these days? Is it still crazy like 2009 and 10 when they had really pulled back the standards on credit, where it was really hard to get a loan? Or is it more like 2005 and 6 when it's really easy and if you have a pulse, you can get a mortgage? Well, the answer is it's kind of somewhere in between. It's not that easy to get a loan, but it's just hard enough where you have to have a job and you have to have decent credit. So with that in mind, let's talk about a few of the basics of getting a loan. So debt to income, DTI, this is an important term you're going to want to be familiar with. You're going to hear it from your loan officer while you're going through the process of getting a loan. We're obviously not lenders, we're realtors, but we work very closely with a number of very reputable local lenders. So what is the debt to income ratio that the lenders are looking for? Well, if you're on FHA, and I'll explain what that is in just a minute, it's 55%. So that means your total debt cannot exceed 55% of your total income. On conventional loans, it's usually more like 45%. So FHA gives you a little more purchasing power knowing that you can go up to 55% versus 45%. So what are the different kinds of loans you can get? Well, the answer is a little bit complicated. There's over 400 loan programs out there. So with that in mind, we've kind of written out the 5 that we see used most often. We'll kind of give you a synopsis of each of those. Conventional loan you see used a lot. The down payment starts at about a 3% minimum. Credit score starting about 620. So if you can get qualified, using a conventional loan is probably the best way to go for most people, depending on your situation. The condo association doesn't have to be FHA approved, which many of them are not, especially here in Snohomish County. So conventional is a great way to go if you've got at least a 620 credit score and you've got at least 3% down. The down payment can go all the way up to 20% or 50% even, and once you go up to 20%, private mortgage insurance drops off. You don't have that cost every month, which can save you a ton of money. After conventional, we've got FHA. You see FHA loans used a lot for first-time home buyers. The down payment standard for FHA is 3.5%. So if you have credit score of 580 or above, you can probably get approved for an FHA loan. And again, going back to the DTI, your debt to income can go all the way up to 55%. So you're gonna be able to get more house using FHA financing with that higher DTI ratio. There's also a down payment assistance program. It's the state bond program here in Washington State. It's unique to Washington. There's other states that have similar programs, but the DPA program you can use in conjunction with the FHA program. A lot of abbreviations there, kind of a mouthful, but that allows you to buy a home with pretty much nothing down. So ask your lender about DPA loans and know that the DPA loans are going to change your debt to income ratios as well. Something to keep in mind. VA loans, for the people that have served in the military, there's some requirements on having been in active service for X amount of time or deployed in combat for X amount of time. Check with your lender, make sure that you're going to be qualified for that. The VA loans are a really good loan. It's a great way of giving back to people who served our country. We love VA loans. 0% down, it's just a great way to give back. USDA, this is a loan that's used in more rural areas. So pretty much in Snohomish County, we're talking east of Highway 9 and north of Stanwood to get USDA. You can get 0% down, and this program is really designed to stimulate, kind of sprawl to those rural areas and kind of, get people out of the urban areas and more into rural. So the government's subsidizing that product. Another one that we see a lot is jumbo, and jumbo loans are just what they sound like. It's used for buying a more expensive home. It's generally homes that the loan is going to be over $492,000. So if your loan amount's over $492,000, you're probably going to be in jumbo land on your mortgage. The down payment amount goes up significantly. You're looking at about a 15% down payment. Credit score also goes up a fair bit. You need to have good credit to get a jumbo loan, about a 660 or so. And just keep in mind, the $592,000 is not the purchase price of the home, that's the loan amount. So if say you're buying a $700,000 home, you need to come in with $108,000 or so to get down to that $592,000. So purchase price and loan amount, big difference there. Anyways, those are just some real basic, kind of information, guidelines for you about the different loan products and kind of about mortgages. If you have any questions, definitely reach out to us. We'd love to answer those for you or refer you over to a lender. Mike Novak, Novak Real Estate Team. Have a great day.